All right, so we've got a bit of mixed performance. The market is hotly anticipating the latest quarterly results from NVIDIA. Those will be out after the bell tonight. For a preview and some more perspective on markets, we're joined here by David Burrows, President and Chief Investment Strategist at Barometer Capital Management. Nice to see you.
Good to be here.
How important is a company like NVIDIA, do you think?
Well, there has rarely been a company with more anticipated results, than NVIDIA.
Yeah.
It's obviously the tip of the spear in the AI story. And, people are definitely long the stock, very high expectations. Obviously, the question is, can they overwhelm, or will they underwhelm? It's going to be a long story, but this is an important data point.
And the stock itself, after the run-up that it's enjoyed, and the market cap that it now sports, has been one of the key factors for the S&P's outperformance this year. But we have, since we were talking about AI endlessly, watched a broadening out of the market rally, which I would imagine for someone like you is a fairly constructive development.
Yeah, look, we had a very significant tech weight coming into the end of last year. And since then, we've gone from about 28% to about 11%. So we're actually significantly underweight tech, partly because it's a little bit crowded, but also because there are some sectors that are less owned that actually look really, really good. And maybe the risk reward is a little better. Having said that, there are some key companies in the tech space that are early winners from AI, and you can point to it, and NVIDIA is, of course, one of them.
Yeah. So I guess the S&P hit a 24th record of the year in a day of fluctuation yesterday. We had one guest who noted that the average bull market, going back to World War II, typically nets out at around 5 years, and that we're something like 19 months, I think, into this one for the S&P 500. Yeah. So, when you look more broadly speaking at the flavor and characteristics of the market right now, how do you feel?
Look, we had a 5.7% pullback in the S&P in the month of April. Market tends to have 3-5% pullbacks over the course of a year. I track breadth, or the percent of stocks in the market or in sectors that are performing well. In a healthy market, you should be seeing expanding breadth. And we have been seeing all of our breadth measures improve since the end of April. And you won't have weakness until you start to see deterioration in that data. So, we think that the market's actually pretty healthy. There's a number of sectors that have joined the rally, even some laggards like utilities, have really picked up over the last 2 months. We went from a zero weight to a market weight there on expectation for pickup in demand through AI and data centers and so on over the next few years. So there's a lot of things that you can be doing. You don't only have to be in tech, and there's some great stories in tech.
Yeah, and so the Canadian market a little weaker this morning, in part based on oil and gold being lower. That's that's part of the reality of the Canadian market, but those sectors have been quite strong for the year overall. How do you feel about the TSX, which has been trading around record highs by comparison?
So there's an interesting point. If you look at the makeup of the TSX, 4 big important sectors: financials, industrials, materials, and energy, obviously much larger in all 4 of those than in the S&P. And those 4 sectors have been carrying the markets in general globally. So many global markets, after a period of underperformance versus the U.S., are performing really well this year because those 4 sectors are doing well. And, look, we've been bullish on basic materials over the last 18 months, and they've had a huge run-up in the last few weeks. They can certainly consolidate a little bit, but I think we're very early in that story. So I think that the TSX actually can perform quite well on a relative basis going forward here, keeping in mind that the Canadian consumer is relatively less important to the TSX than, say, the consumer is important to the U.S. market because of the sector makeup in our market.
And beyond earnings quality and inflation trends, is there anything else that you're watching to determine what can happen with the stock market this year?
when we look at the industrial sector, it's the most predictable because you have a lot of big themes going on. The consumer is the one to watch, and we are a little concerned about the consumer. We really only own Costco, Amazon, and Dollarama, which tells you our thoughts on the consumer, right? You look at companies like Nike and McDonald's and Lulu today, you know, the discretionary spending is down, and that's something that we would want to avoid a little bit.
Okay.